Good evening, all. Ira Epstein with your Spider ETF wrap-up, and this wrap-up is for the evening of Thursday, and we're at the 15th of September, 2022. You know, more and more companies coming out with terrible forecasts. I don't know if you saw FedEx, but it got smashed when they came out, and their earnings missed, and now they're saying they don't see the business that they were hoping for. This is going into, the holiday season. I'm a little concerned. So the stock market in the morning, you're probably going to see a number of those companies. It could be UPS, it could be all of them, probably taking a lead from FedEx and going to get hit. We haven't changed anything in the stock indices. They're all under pressure, and they're under more pressure tonight. You're down about 160 points in the Dow as I'm talking to you, about 20 points in the S&P. So the sell-off continues. It has been a horrendous market to try to get positions on. I have tried repeatedly each morning and not being successful. I can live with that. The market's reacting to Monday's CPI report. There's no other way to say it. And it's been a vertical change in the market to the downside. Nothing is changing there. And now you've got the problem. How do you deal with the Fed this Wednesday when they come out and they're going to raise rates? Is it 75 basis points? Well, there's a 76% probability of that if you look at the Fed fund futures, the euro dollar. 26% chance for a 100 point. Is there any more real serious economic data that'll come out in front of that? I don't think so. But, nothing's pretty right here. Even today's data on jobless claims, they fell. The estimates were higher. They fell. And it just shows you more strength in the labor market. The thing the Fed said that there's got to be some pain in, you're not getting it. And what about the tentative settlement of the rail strike with almost a 25% increase in pay? Now, I admit, during COVID, these rail workers, they were made one of these categories that they had to work, they had to show up and all that. These guys were under tremendous fire, and they've got to be paid for that. It's that simple. 25%, though, I'm not saying it's too much. It's inflationary. That's what I'm saying. So you got an inflation number there. If I'm a port worker on the West Coast, I got a contract coming up. Guess what, folks? I'm in the same category. I have to work. I have to show up. I have to do this. This is what the inflation scenario is, and you got to be careful of it. The Fed is watching it. When you look at Home Depot, it's not backing off at all. So as rough as things are, and mortgage rates over 6%, you think people want to fix their homes, they're doing nothing. They've got their hands in their pocket, and Home Depot stock is taking a beating off of that. You can see this is, again, the CPI. Look at the straight down move. So if you're frustrated this week that you can't get your trades off, nonsense. There's always another week. There'll be another event. So you miss a week here. So what? In order to catch any of this move, you had to be bearish going into the CPI, and you were fighting the short-term move to the upside that the market had done. Now the guys that are bottom picking, they're getting sliced as the market just reaches to the downside. But you're down to the Bollinger Band. Let somebody else sell under that. That's a sucker play, in my opinion. And you're oversold. Now, if you can embed where the blue and the red lines are going sideways for several days or more under 20, that means on the rallies, at least I'll take a shot at the short side. What else is bearish on this chart? Just had a bearish crossover. The 18-day average just got under the 100. Now, admittedly, the market has made a new low for the move already. Often you have some price action under it that it can attack, but this stock is getting beat up and beat up bad. Then we're at AMC. Did I not tell you I thought the volatility would come out of the market? It did back here, and you have gone nowhere in this whole process. Remember, they introduced another category of stock, and that took a lot of the fanfare away from this. Probably not worth watching anymore. In Apple, we're down again. And there's a lot of short sellers showing up here. I was reading stories about it. So they're hitting it. Remember, history shows that after the new release of a phone, Apple stock often goes down. It runs up prior, it breaks on the release. It's done its history lesson. Now the question is, what is Disney's doing? There's so much talk about, well, are they going to spin off ESPN? They're not going to spin off ESPN. What are they doing with the TV stations, other things that they own, movies? Do we have anything big coming out? You've got all this. You're in the middle of no man's land. You're in a narrowing Bollinger Band. Son of a gun, hard market to trade. You've had a pattern of higher lows, higher highs, and you're staying under the 18-day average. I don't know how to trade that. I don't know how to trade most of this right now, which is fine. I put my hands in my pocket. There's always tomorrow. XLF, notice the battleground. You did get 2 days in a row straight up and over. And you pulled back dramatically from that move yesterday. And today you came up and you challenged the resistance. Now, if you take out today's low tomorrow, I think that until you get back over today's high, I think the pros will come out and sell right under today's low, looking for 32.51. And I told you where I think they'll put their stop on the market. In XLI, I think the market's going to go down here and find support at 90.11, not a buy, just short covering coming into the market. In fact, if you can get down to these Bollinger Bands, I think the professional money is going to take money off the table and probably not have much of a position going into the FOMC meeting at 1 o'clock announcement on Wednesday. Be careful here. It looks to me like you're going to get another bearish element. The red line, the 18-day average, is going to fight, be it tomorrow or Monday, to get under the green, the 100. And if it does, generally target the lowest low you made as the market wanting to hit that target. The XHB, the home builders, well, 6% mortgages, it's pretty hard, other than if you're a specialty builder dealing with people that are well-heeled, coming in, and they don't really need the bank financing in a big way. Maybe they're going to put most of the cash down, all of it, whatever. But for the majority, it's an index, a problem. On the energy sector, you do see the battleground. Tell me you don't see how the market just married itself to the 18-day average, caught in here, not doing much of anything one way or the other. I don't know. Until it takes out 79.65, it is bullish. There's more bullish than bearish to it. Take that out and you roll over and you're probably going to 77.35. In GLD, the bears have control. All you had was a bear market rally that began right through here, rallied into the 18-day average and let go. How many times in the course of a year do I tell you we have a contra trends rally, bear market rally if you're under that, should run into the resistance at that 18-day average and have a big problem. GDX is now bearish. I was telling my traders in my update this morning, I think the pros are going to sell now against that 18-day average. Stops right over here, 24.89, and I think they're going to look for 22.89. If the gold is no good, whatever's in the ground is no good. When I say no good, not worth $2,000 an ounce any longer, right? In copper, here's your bear game. If the market's going to take out the lows tomorrow of today of 29.91 until you get back over today's high of 30.75, the odds favor maybe a move back to 28.40. TLT, no. You're flirting with losing the embedded rating. It's time to walk away from this trade completely, 100%. UUP, I said I thought you'd be stuck in the narrowness of the Bollinger Band. So far you are. FXE would be the identical thing, and that leaves us with nothing. We've got what we want to be. Now, this is a great time if you're looking for information on all these different ETFs to look at what we write on the futures. You know, TLT is going to look at a certain mixture of the interest rate futures. We're writing on that. What do you think SPY, DIA? It's all what we write on stock indices. The energies, when you're trading them, USO, ties right into it. So this is a great time to look at that and you say, oh, these guys are putting out reports throughout the day for me, stuff that I probably can't find, be it on your Bloomberg, and I'm talking most of you don't have a Bloomberg terminal. Terminal's got everything, but not what we see when we go to the website. That is a very light-skinned part of it. So We have a lot of information like that. We have information companies like Reuters would have. I think you'll find it interesting. What do you have to lose? We'll give you a free trial to it. Just take your cursor, move it straight up. You'll see an icon, give it a click, and away you go. You can go to our website if not, under free offers, or give my staff a call. I'm Ira Epstein. I loved having so many of you in our webinar today. It was super successful. We found an error. We'll have it fixed where we get even more questions in when you first sign up. Have a good day.